Right. Good evening, everyone. So today, last session on financial reporting issues, and I feel this is the last lecture of the semester as well as the last lecture in the degree, as I think. Right. So then let's see what we can do in financial reporting issues. Actually, I'm going to do kind of revision thing today. Last week also I did kind of revision, and accordingly, last week I covered three aspects, as I remember. Four aspects: introduction part. Then there we discuss something about financial reporting framework, and thereafter we discuss something about IFRS 2 share-based transactions, and we discuss something about IAS 19 employee benefits, and also we discuss something relating to financial instruments. Those are the things we learned last week, right? Now this week actually we are going to recall to understanding on little on group accounts. I'm going to summarize everything into 1 or 2 slides, because I'm sure mostly you don't have basics in group accounts. Actually, I wanted to cover only the basics. Accordingly, I'll give you some double entries and all others important things or important learning. So we can say important learning points relating to your examination questions. So if time permits, we'll see whether we can do at least one question, 1 or 2 questions from group financial statements. Also, I'm planning to do at least one paper, to discuss one paper, and I'll show you how to write answers for the examination. Right? So those are things we are going to discuss today under revision session. Right. Now, when it comes to group accounts, wait 1 minute, please. All right, now work will be easy. So I'm going to write and draw everything relating to group financial statements to understand basics. Right, first point, if you can remember, in group financial statement, the first concept we learned about the group. I hope you can remember this picture. What's the picture, if you can remember? I draw like this. There are two different entities called A and B, let's say parent and subsidiary. Right? So then a parent will prepare his own financial statements. They will prepare their own financial statements. Right? And also subsidiary will prepare what? Their own financial statement. That's what we learn. They will have. Right? So in group financial statements, what we do? Group financial statements. Actually, if parent acquires subsidiary, let's say example 80%. So in addition to parents' individual financial statement, parent should prepare another set of financial statement called group financial statements, including its subsidiaries. That's the structure we learn. I think because of thundering thing. Right. So then the group structure is there. Then we prepare another set of financial statement having these two. Right? So we call it group financial statement. Group, which is prepared by whom? It is prepared by parent. Right? It is prepared by parent. So that's the point. First point you have to remember. Right? In group financial statements, so look, I'll separate one by one. This is the first point. Then you can understand what is group financial statements. Second point, I told you, I'll give you like a minimum of 10-20 points. 10 to 20 points I'll give you. Second point, how do you prepare group financial statements? Right? So then I told parent is a responsible party to prepare and present group financial statements. Accordingly, now how parent should prepare? When it comes to income statement, statement of financial position, we did line by line consolidation. We can remember. Line by line, right? We added line by line, especially equal items, and we prepared group financial statement. Let's say now if parent has assets, if parent B, so subsidiary has assets, then to the group we have total assets there. In addition to that, we discussed something about intercompany transactions and all others, right? Then I'll come to adjustments later. So then, if parent buy subsidiary or one entity buys another entity, what will happen? The second concept you have to understand is, actually, if you can remember very first questions, I did line by line consolidation. In that case, investment was equal to, and remember, investment was equal to net assets on the acquisition date. Let's say parent invested in subsidiary 80%, or let's say even 100% no worries. So then on that date, if I give you subsidiary's balance sheet or statement of financial position on the acquisition date, let's say they had total asset of this much, let's assume so, say 16, and current sorry, this is total asset, and here we assume we had share capital 5, reserves, let's assume 3, not 3, let's say 8, and current liability, let's assume 3. Now this balance sheet balance. Right? Now let's assume A is going to buy this entity B. If I pay, what is the minimum price that I should offer? I told you this. Minimum price should be 13, right? Net assets of the business on that date is how much? 13. So therefore, when you buy a business, there will be externally generated goodwill. It is the difference between net assets on the acquisition date and net assets on the acquisition date and the investment made. Let's assume here parent paid, let's assume we call it actually to calculate goodwill on acquisition, we prepared an account called, what is that? Cost of control account. Right? Through cost of control account, the main purpose is to calculate goodwill. Right? In good cost of control account, this side we put what? Investment. Let's assume they invested, let's assume it's 12. To buy 80% of things they purchase, let's assume 12. And net assets on the acquisition date is how much? 13. Net assets on the acquisition date, that is equity. This is net assets. Let's assume parent bought all shares of subsidiary. In that case, if parent bought all shares of subsidiary, what is a goodwill in this? In this case, what is negative goodwill? We call it profit on bargain in purchase is this much. I'll change it as better now. For the first question, no? 15. I paid 15. To acquire everything, I paid 15. Then what's the difference? I paid 15 to buy 13 worth of things means there is unrecorded goodwill of how much? 2. We call it goodwill on business acquisition. Right? Right. Second point. This is 100% acquisition. Let's assume then second concept you learn. What is second concept? Goodwill and profit on bargain in purchase. Very simple. Goodwill means the difference between net assets on the acquisition date and investment amount paid or amount invested. If the amount invested is greater than net assets on the acquisition date, we call it goodwill. It goes to group financial position statement. And if the net assets on the acquisition date is greater than the investment made, we call it profit on bargain in purchase, and it is taken into consolidated retained earnings. Right? It is taken into now. Look, this goes to goodwill. If difference comes from this side, what is it? What is that? We call it profit on bargain in, what is it? Purchase. It goes to group income statement. It goes to group income statement. Means retained earnings, group retained earnings. Better not income statement. I would say, sorry. Group consolidated retained earnings credit. Right? Now the thing is, another concept, then this is the concept of goodwill and profit on bargain in purchase. Look now, what are the concepts I do? This is first, how to prepare group accounts. Then second and third, what is that second and third? What is second and third? Goodwill and profit on bargain in purchase. Concept number 4. Look, this is number 4. Number 4 is, likewise, I'll do around 15 to 20 concepts. Then you can recall everything with double entries, everything I'll write. If you look at this thing, at least before coming for the exam, you should be able to manage 50% of the question. Group marks. Fourth point, in this case, I assume that 100% acquisition. I assume this is 100%. Now next time we'll assume company buy only 80%. Then what you do? Then we have to prepare again cost of control like that. Then this side we take total net assets as previously. How much it was? 13. Right? This side we take actually 80% of investment. Why? 80% of investment means actually investment was made only for 80%, that investment. Then it is how much we invested? 15. Since partly purchased subsidiary, there is another concept called, what is the concept? If 80% is there, balance 20% we call NCI. Then the concept of NCI will come into play. Here we have to take the third concept that I teach you is fair value of what? Fair value of NCI. How to take fair value of NCI? Then now there are two things to learn under fair value of NCI. Definitely all these 3 things will be tested in the exam. One, how to calculate fair value of NCI. Right? There are 3 methods. Second, how to record fair value of NCI. There are 3 methods of how to calculate in NCI. I told you, if NCI value is given in the question, no more is, easily you can put the double entry. What is the double entry for fair value of NCI? Cost of control debit, NCI credit. Very simple. right? If it is not given, there are two methods to find it. Sometime examiner can give you market prices per share. Understand? If market price per share is given, what you can do? Take NCI number of shares. It means number of shares which you do not acquire. Now in this case, let's say if subsidiary has 1000 shares, out of that you bought 80%, no? Then 1000 into 80% means 800. Balance 200 shares you didn't buy. Then that 200 into market price per share will be what is? Fair value of NCI. Understand? Then that is the second method. If the market value is given, what you can do? Take non-acquired number of shares from the subsidiary, that into, what is that? Yes, share price, market price per share. Then it is fair value of NCI. Then if it is also not given in the question, you can go in equity method. Then what you can do? Another option, take fair value of NCI on the acquisition date. Now look, made a mistake. Net assets on the acquisition date. Now I have taken all these net assets on the acquisition date. Right? I assume acquisition date and the balance sheet date both are same. Assuming that. Anyway, acquisition date, net assets. What is this? I'll write it. Net assets on acquisition date. Net assets on acquisition date. It's in, no? Right. Then from that you can take relevant percentage. Now here it was 13. 13 into, when I can calculate 13 into 20%. How much is it? 2.6. You can recognize as what? Fair value of NCI. Understood? Then what is my goodwill in this case? Goodwill will be 4.6. Understood? It is about fourth concept. Got it? I am running a little slowly, but hope you can understand very easily. I am going to do all the adjustments like this. It means if you refer only these two slides, you can do everything with examination. It doesn't mean that you should not see others. Right? කොහොමත් ඉතින් ඔක බලන්නේ නැහැ නේ අත්‍තරම නේද? අනිත් ඒවා බලන්නේ නැහැ. ඒකෝර මේක විතරක් බලලා නිකන් ඉන්නවා. So we do the minimum effort, no? But anyway, as final lecture, at least you see this one. This is the final one, no? For the whole the program. It's true, no? Then even people look at this will be the last video you look. Is it? Very good. If you are not coming for the second year, that's it, no? Okay. Once I did, I am happy because this is a batch I took, no? At that time, I was the initial coordinator of this batch, no? So then actually my period was over after recruiting you. Thereafter only Naomi started the program. Actually, Naomi was appointed after recruiting you all, just before the inauguration. Right? So before that, actually, if you can remember, I called you and I did all these coordination work when you were recruited, right? So that time I was the coordinator. Thereafter only actually Naomi appointed. So one side I am happy and I am not happy one side. But this time I am not happy about the pass rate. Dropout rate is little high. Actually, I did 2 batches. I got another batch one before you. That means you are 4th batch, no? You are 5th batch. Yeah, before your batch, I got another batch 44. We had only 44 students there. Right? Actually, we had 22 before that. Then I make it double to 44. Right? So then out of 44, I completed somehow 37. Right? So then with the last year, so I completed 37 students. Out of that 44 also, two people came to this. That means effectively they are also completing now. Valley Vita and there is another one came for this batch from the previous one. Now effectively out of 42, only 5 drop out due to unavoidable reasons. Now again I took another batch your batch also taken by me. So then it was 70 something, no? 79 or 74. I was targeting to have at least 100 that time. Maybe we had the application around 150, 136. Out of that, we selected only 120. Then 40, 16 applications were rejected. Out of those people, only paid the 70. Now, how many people you have? 79. Originally, you have 74 or 79. I am sure out of 79, only 50 people will complete. Is it? Sure, less than that, right? So in that case, I am not happy because it's not because of the coordinators and others' responsibility. That is because of the students' responsibility. It's like 50, it's like 70%, 30%. More responsibility should be taken by students. They don't work hard. They take this very simply. So actually, last time also same out of 44, but we need to follow up students. One side, it's true, but even we follow up, people will not work. Even now, this time coordinators, they are following up. They are asking why people are not coming for attend lectures and all, but I don't know. People are not here, right? Even I don't know whether no need to come actually. It's not a requirement, no need to come, but at least you have to see these videos and you have to do studies. Last time also for accounting, only 54 or 51 students now for the accounting paper. Last time out of 70, 20 drop out. It's like 40%, right? It is not a good thing because dropout rate is high because of students' faults. Very clear, because they don't study that much. They take this very simply. They think they can pass this very easily without having any effort. Like anyway, the people who are like you're coming no anyway, so you're coming and trying to do something. Do you have any repeats? No. Do you have any repeat subjects? No, no repeats. I'm sure people who are coming here, they are anyway keep in touch with the studies. They can go through somehow. People who are not coming, I don't know how they are going to complete this. All right, anyway. We wish you all the very best to do your maximum, but let's see what will happen. I'm sure not like the last time financial accounting. This is little harder than that. You feel, no? I'm sure this is little harder than that, but I'll keep 50% there in the paper. You have to earn balance 50%. From the given 50%, you should be able to take maximum 50, otherwise you will fail. Because you can, if you can refer these revisions, the questions I did in the class, easily you can get 50%. I don't change even figures, everything will be there. You refer and come, because I have done a lot of questions. Can you remember? From those questions, you should be able to select few and ready and come for the exam. Those will be there. That's 50%. Balance 50% will be with modifications. Another 30% will be modifications. Another 20% will be totally new question. Then it is very fair, because people who need to go for A pass and all the good grades, they should learn something and come for the exam. That is my strategy. Last time also same. You look at the paper. So it was very easy. Last time paper little easy than other papers. I'm talking about accounting paper. Had good results also. You got results in accounting? Accounting, what was the grade you had? B plus. Means 55. More than 55, no? Right, anyway, now think on that seriously. Hope at least you will come, you will see this revision video at least today and last week. Revision video at least several times and come for the exam. That's my request finally. Right, we'll move to the fifth concept. Now I told you how to take fair value of NCI in 3 ways. Then the fifth concept that I'm talking about. Fifth one. I'm sure the Mehemat summarize kalabai number, right? So these are very basic things. But remember, don't take last time exam paper as model paper question, but questions will be harder than harder than that, sure, right? Fifth concept you need to think about after NCI story. You need to think about pre-acquisition, post-acquisition reserve, right? That means pre-post story. Up to now, I assume that pre-post. Up to now, I assume that the balance sheet date figures are given as at the acquisition date. It means balance sheet date or reporting date is similar to the acquisition date, but it is not so. After having the acquisition, let's say if you acquire a business on 1st April 2014, if you are preparing financial statement for this year, you have this year balance sheet. So therefore, we have to think about pre-post. What is pre? Pre-acquisition profit means What is pre-acquisition profit? Pre-acquisition means profit at the acquisition date. AD means everywhere acquisition date in my examples. Post means profit from, what is that? Acquisition date to what date? What is RD? Reporting date. Total, actually not sure, I should not say pre-acquisition, post-acquisition profits. I should say pre-acquisition, post-acquisition reserve. Because all are accumulated in the general reserve, revaluation reserve, all type of reserves, retained earnings, everything coming under reserves. Right? So then at the acquisition date, now how to account for this? That type of reserves, double entry, relevant reserve account debit, and we have to credit it. Yes? COC credit, cost of control credit. Very simple. No, most of the time these figures are given without having any effort. You pick these amounts what I teach today and pass double entries. 100% sure from the consolidation sum you can get more than 70%. From the consolidation sum you can get more than 70%. So 100% sure, because these are the concept we test now. Some figures are given directly, some figures are not given directly. Sometime what I can say, I'll give the reporting date reserves and I will give only the year beginning reserves and the reporting date reserves. So you should be able to, made mistake. Reporting date reserves and the beginning of the year reserves. So then beginning plus during the year reserves will be the end reporting date reserve. So likewise, there may be different ways of calculating this, but mostly these figures will be available in the question. Then what's the double entry for post-acquisition reserves? Post-acquisition reserve account debit, reserve account debit, consolidated where? Consolidated retained earnings credit, but remember there will be plus or minus what? Huh? What is this? Plus or minus adjustments. There will be some unrealized profit and all other adjustments. You have to do that adjustment and take. Right? Alright. That is fifth concept. Now I have done 5 concepts. Sixth one. This is pre-acquisition, post-acquisition. Oh. Sixth one. I can remember I did this like this, no? I did once like this, but I didn't write on that date. I just explained everything. That's it. Right?
Yes. Now if I open it up again, it's still protected, so you just have to go to the review and click unprotect sheet. So I'm going to open up, edit it here, and that's it. You're all good to go. Just close this down. I have it saved to my desktop, so I just want to do a new folder and drag this into here and double click on folder. So now you want to go to
Singh has, I think, voice is here. You are watching a video or film while participating for the lecture, I think. Right, I mute you. No worries now. Right. Right, now sixth one. What is next concept we need to learn? What is sixth one? There is no particular order. What should be the next concept we need to learn? Now we discuss about group structure and group the account, The preparation of group accounts line by line, then goodwill, negative goodwill, or the profit on bargaining purchase, fair value of NCI. Oh, can't hear. Yes. Sorry. Here, consolidated retained account credit, and here we have to take another part. Very good. You reminded me, no? It's true. It should be the entry, right? NCI part ID is split. If it is not 100% acquisition, we have to put into 2 as reserve account debit, consolidated retained earnings credit, the group portion, and NCI account credit, NCI portion. Yes, right, good. Since we have calculated goodwill, we have to think about what? Goodwill impairment. In most of the cases, goodwill impairment will be given. In this level, I don't think that I need to give how to calculate impairment. Mostly I will give you. If at least you learn how to account for goodwill impairment if it is given. How to account for impairment of goodwill? Impairment of goodwill. Yes? Anybody who can tell double entry for impairment of goodwill? Since every time we are going with full goodwill method, what should be the double entry? Consolidated retained earnings debit NCI account debit NCI portion and credit to where? Credit to group goodwill, because goodwill value goes down. Anyway, COC, in COC difference is goodwill, this one, look. Then we take this goodwill into goodwill account, 4.6. Then if it is impairment, you have to subtract from this side. Understand? So therefore, what we need to say, group goodwill account, consolidated goodwill we can say. Credit. That's how we do impairment of goodwill. The parents portion part, it should be charged to consolidated retained earnings. For the NCI, we charge it to NCI account. Balance you charge to goodwill account. Then after charging the impairment to goodwill account, balance amount should be taken into statement of financial position. Understand? Let's assume like this, but you have to be careful sometime. If the acquisition happened few years back, this impairment of goodwill should be divided, or the retained earnings part should be split into 2. Why? Part should be, remember, current year portion, remember, where? Should be charged to profit and loss account. Because when you prepare income statement, that's how you asked the previous question. That's how it comes. Look, if you prepare income statement with impairment, the impairment portion relating to the current year should be charged to profit and loss account, current year income statement. Understand? It is point. You have to remember. No, in that case, no need. Because finally we divide into 2, no? NCI and others. It is a total one. He asked whether it is the total impairment of goodwill applicable to the current year, not only the group portion. Why? In the last part of the income statement, if you can remember, total profit we divided into 2. Profit attributable to equity holders of parent and NCI. Understand? There you have to consider it when you take the impairment. Understood? Get it? Right? So then the total part. Remember that point. It's very important. Good to ask. Right, then I did 6 point, even though it is 6, sometimes there may be more than that. Then here even 6, I can say it is even 7. Why? If the acquisition happened few years back, from the impairment loss, current year portion should be charged to Yeah, current year income statement, current year portion. Let's say impairment for last 5 years 15. Then last 5 years 15 means for the current year 3, right? 15 divided by 5. So then current year portion you have to charge to profit and loss account. If you prepare income statement, if you prepare only the balance sheet, you charge everything into retained earnings, consolidated retained earnings. Understood? All right. Number 7. What is number 7? Any other concept you learn in group consolidation? There is no particular order, I told you. These are very fundamental concepts. Those concepts will be applicable to those 6 points. Actually, even not even 6, we have more than that inside it. Those few points will be repeated for any question in consolidation. Everywhere you can show this, you can see this. So therefore, you have to be expert on those areas. Another one is, I'll move another area, little bit big area. It's about intercompany trading of fixed assets and inventories. We call it actually intercompany transactions, right? Intercompany trading. What are the types of things we learn under intercompany trading? Intercompany trading of inventories and intercompany trading of fixed assets, yes, right? So how to account for intercompany trading of inventories? Another one, intercompany trading of, where is it? Fixed assets. 2. So then there are the 7th one. We can take say 7th as say this one. Intercompany trading of fixed assets. Sorry, inventories first. I told you to remove something called unrealized profit. Right? In that case, how to learn? Can you remember? If unrealized profit, what do you mean by first unrealized profit? Unrealized profit means profit element which is added in the closing stock as a result of artificially added profit at the time of selling inventories by one entity to another entity inside the group. Unrealized profit means the profit element which is not included in inventory, right? Where it was added by the seller at the time of selling goods from one entity to another entity, from seller to buyer, inside the group. On the remaining stock, we have to remove unrealized profit. I told you good story, if you can remember. If there are parent and subsidiary, if parent sell goods to this party, let's say 100 plus 10, 110. So if all are remaining unsold at the end of the year with S, what is total profit I added? It is 10. I sold 100 worth of goods by adding 10 to subsidiary for 110. So be careful how to calculate unrealized profit. Most of the people do mistake at the time of calculating unrealized profit. You have to be very serious and you have to be very careful on calculation of unrealized profit. Got it? Right. So then how to calculate, how to record unrealized profit? I told you very simple point. Calculate unrealized profit according to the facts given in your question. And how to pass a double entry? Yes, can remember. How to pass a double entry for unrealized profit? I told you kind of general entry. You don't want to think whether it is sold by parent to subsidiary or subsidiary to parent. Yes, I told you a general double entry principle to record this one very easily. How to record it? Sellers retain earnings, debit. If you can remember, I told you it several times. Sellers retain earnings, debit, and where to credit? Group inventory credit. It's very simple principle. I told you several times how to calculate that. Sellers retain earnings, debit, and credit to sellers retain earnings, debit, and group inventory credit. I want to remind you something. That's why I just look at this. Give me a minute. I need to look at small point that I missed. Give me a minute. I missed one. We didn't recognize amortization of intangibles. Other intangibles we didn't do. That's missed part. I think. I wanted to verify whether I am doing all. That's important too. I can't find. Right, anyway, it doesn't matter. Right, I can't find it. Yeah. Right, then sellers retain earnings, debit, and where to credit, I told you. I'll write it here. Seller retain earnings, debit, group inventory. Group inventory credit. Right? But same time, remember when it comes to income statement, you have to think about some adjustments. What is that? Intercompany sales and purchases should be eliminated in full. Where? In income statement, you have to subtract from sales as well as purchases. Remember, total amount of sales made by one entity to another entity within the group, not the amount applicable to group or some others. Understand? Right? So then I'll write that one also. Especially remember unrealized profit adjustment in income statement. Yeah, I'll take income statement adjustment separately. Good, no? Easy, right? Some important points to remember in income statement. So that's all about this thing in the balance sheet. Oh, shall I write here? Relative income statement. In income statement, what we have to do, this is statement of financial position. Income statement, you have to eliminate, you have to cancel what? Sales and what? Purchases. Right? Also, I told you, unrealized profit should be added to what? Cost of sales. Look, there are two adjustments here. This and this. Understand? That is number 7. Then number 8. Number 7, actually we had two things. Intercompany trading of fixed assets. Right, now remember what I missed. I missed fair value adjustment previously. That was the thing I was checking this. Right. Now intercompany trading of fixed assets. When you sell intercompany trading of fixed assets, first what you need to do? Again, artificially added profit of selling company to buying company should be removed from your group accounts. Accordingly, what you need to do? How to reverse it? Sellers, again I say, yeah. Sellers retained earnings, debit, where do we credit? This is unrealized profit. Where do we credit? Accumulated depreciation. Oh, what? Directly. Group PPE credit. This is accumulated depreciation, eh? OPP credit. Also remember, here inside 8, now we have another 2. Look, you better say 8, this is 8. I'll numbers properly. I'll take this as 9, then okay, problem, easy for it. Then this is 10. What we have to do here? Over provision of depreciation as a result of this should be eliminated. Right? Not over provision of depreciation. Now how to do it? Over provision of depreciation, again, who is providing depreciation? The buyer. Therefore, buyer's retained earnings debit. Look, buyer's retained earnings debit, and where to credit? Buyer's retained earnings debit, made a mistake, other way around. Over provision, no? Look, people do not come for lectures. Even I am suffering from fever, I am coming for lectures. Right? So today I am not well anyway. I am suffering from fevers. Huh? Yes, right? Look, accumulated depreciation. Oh, you can see PPE debit, and we have to credit. Yes, buyer's retained earnings credit. What is this? This is over provision of depreciation on what? Unrealized profit added to PPE. Right, that's all about it. Right? Even in income statement, you have to be careful there. If there is any profit added for the current year transaction, then you have to remove it from sales. if I recognize it as so, or it should be removed from other income or profit, right? So that's all about intercompany transactions of intercompany trading, intercompany transaction of fixed assets. Understood? So it is 10th one. We'll go to 11th one. That one is elimination of what? Intercompany. What is it? You can remember, you can tell. Intercompany? Yeah, transaction one we have done already. Intercompany receivables and payables. Also, what? You can think it as, what is this? Current accounts. Right? Cancellation of intercompany transaction of current accounts. Then how to do that? When you have intercompany receivables and payables, the theory says if there is an intercompany receivable or payable at the end of the period, it should be eliminated in full. Understand? If there is any difference between receivables and payables, it will be arise as a result of cash in hand. Sorry, made a mistake. Cash in transit or goods in transit. Understand? It can be done through receivables and payables, either receivables and payables, or through current accounts. If there's any receivable and payable difference, it should be arise as a result of cash in transit or goods in transit. Look this sample transaction. Let's say in parent's company there is receivable from subsidiary. Receivable of subsidiary, let's say 5. But in subsidiary there's payable to parent, let's say only 3. There is receivable from subsidiary in parent's financial statement. Receivables are as 5. There is subsidiary in subsidiary's books. There is a payable of 3. Examiner can say the reason due to this difference is reason for the difference is cash in transit. So then what should you? Or the checks in transit. You can say, oh, goods in transit. So then how to recognize it? Then what you can do? Pass a double entry. I'll write it. CIT debit, it goes to checks in transit. Debit, how much? 2. And payable account credit 2. Then it will come here. Then this 5 should be cancelled against what 5? This 5 in the balance sheet. Understand? After recording checks in transit, it becomes 5. That check in transit balance, CIT balance, should be recorded in current assets in the group financial statements. Got it? Same thing can be happen for the current accounts as well. If there are 2 current accounts in 2 accounts, see the difference as reserve check in transit or cash in transit or goods in transit according to the facts given by the examiner. But remember, if I need, I can write the double entry like this even. Checks in transit debit 2 and credit to receivable of subsidiary. Then it will become how much? After crediting 2 to 5, it will become, if I credit 2 here, I mean here, if I credit 2 here, this will become 3. Then these 3 can be cancelled again, the other 3. Understand? That means both are correct in that case. Right. It's about 11 point. Right. Then 12th one. Adjustment for fair value adjustments of equity. Understand? Let's say like this. I can say at the rate of acquisition, subsidiaries equity is this much, but the fair value of subsidiaries equity on the acquisition date should be greater than 20. What's the meaning of that? Look now what I say. Fair value of equity, book value of equity at the acquisition date, let's say 50. But the fair value of equity at the acquisition date, they say it is 60. Then this thing we call, what is it? Fair value excess. Understand? Fair value excess. This fair value excess can be happen as a result of one or few items. Sometimes let's say this came because of land has been understated. Now the land value has been increased. Or you can say a depreciable machine value has been increased. Depreciable machine value has been increased. Or you can say inventory has been increased. That's why we have kind of excess of fair value compared to its book value at the date of acquisition. First, what you need to do? Take this fair value excess by taking book value of equity at the time of acquisition and fair value of the equity. Mostly fair value of equity at the date of acquisition is given. Using their financial statements and some other facts, you have to find what is book value at the date of acquisition. Right? It is given now. How do you find book value at the date of acquisition? You take share capital, reserves and everything. Right? Share capital and reserves very simply at book value on the acquisition date. So this difference, let's assume if it is arise as a result of non-depreciable land, how do you account for this? Cost land account debit, let's say. Land account debit 10 and cost of control credit 10. Remember, if it is non-depreciable land, let's say if it is due to another reason, if it is due to, this is one scenario, if it is due to, let's say, inventory overvaluation, then inventory account debit, that means group inventory debit, where do credit? Cost of control credit. Let's assume this is because of overvaluation of, cannot be, market value we don't take. We don't take. That is even, it is in the purchase consideration. This is because of depreciable machine. Let's say there is a machine which can be depreciated over useful lifetime. So then first there are two adjustments in that case. It is depreciable asset. Look, even in 14th one we have now 4 sections separately. Right? It is depreciable asset. What we need to do first, record this as first machine account debit, machine or whatever the depreciable asset account debit, and credit to where? Cost of control credit. It is 10 in this example. That's one side. Other one is, if it is depreciable, now we have not provided depreciation on this fair value excess because we have not accounted now at the time of acquisition. From acquisition date to reporting date, total accumulated depreciation which should be provided on this fair value excess should be accounted as how? Subsidiaries retained earnings debit, credit. Machine account, machine accumulated depreciation credit. Look, let's assume it is over 5 years. If so, 10 divided by 5, then it will be 2. Debit subsidiaries retainer is 2, and credit machine account or accumulated depreciation account credit 2. That means easily you can go to your balance sheet and subtract it from machine. Show all these adjustments on the face of the financial statements. Look, inside 12 we had another 3. Altogether 15 I did not. Understand? What else we missed? Related to balance sheet? Anything? One point I missed every time. Right. Hope I took all the adjustments. Anything else? If there is any intangible asset which is not recognized at the time of acquisition, how to recognize? If there is any, let's say, a patent which is not recognized at the date of acquisition, unrecorded intangible, how to record it? Intangible group intangible debit, group intangible account debit. Where to credit? Cost of control credit. Right. Next one. If there is any contingency which is crystallized after that, how to do that? Any contingent liability. Contingent liability, later it was crystallized, or later it has become liability or provision. So then how to do? Cost of control account debit, liability or provision account credit. It comes to current liability. Anything else? In the case of associates, I think I did associates also. In the case of associates, what you should remember, you have to prepare one account called, what is it? Investment in associate. If there is any associate, we don't do line by line consideration. The investment made in associate, we put into separate account called investment in associate, and we put investment here, investment, and what do you take here, this side? Investment will come from the balance sheet, statement of financial position, it's there in parent company column. This side we take what? Post acquisition reserves, post acquisition reserves earned by what? Earned by the subsidiary. Post acquisition reserves earned by the subsidiary. How do you calculate post acquisition reserves? Right? So if there is any increment, mostly share capital will remain unchanged, no? So you have to take retained earnings and other reserves. You take acquisition date reserves and reporting date reserve. Oh my god, problem came. හිටින්න එකපාරටම යනවා. Look. Huh? Number? Can't. What's it? Huh? Provision account credit. It goes liability. This one. Contingent liability. Contingent liability. Yeah, type everything again. Reporting date reserves. Right? Then the difference you call if there's any difference inside this investment in associate, that should be recognized as balance on the statement of financial position. Fortunately, at the end of the thing, it happens. Now it's quite difficult, right? I can't write. If there's any intercompany transaction of selling fixed, what is called inventory from parent to subsidiary, or subsidiary, not made mistake, parent to associate to parent, how to take? You take unrealized profit. If it is sold by parent to associate, then double entry should be consolidated retained earnings credit and consolidated retained earnings debit and credit to group inventory. Understand? And if it is from associate, if associate sold that thing to the parent, double entry should be double entry. Investment in associate credit and debit to consolidated retained earnings. Right? If associate sell, investment in associate credit, consolidated retained earnings debit. If parent sell to associate, consolidated inventory credit, consolidated retained earnings debit. So with that, I'll complete all double entries relating to the examination. Hope I gave more than 20-30 double entries inside these. This is more than enough for the examination relating to group accounts. Right? So we'll have a small break, 5 minutes. I need to have 2 Panadols and come back quickly. Right? I'm not well today. Otherwise, I'll not able to continue the next hour. I'll take 2 Panadols and come quickly. Right, now let's start the next session. Now already we have discussed about one more point I missed. There are some important points to remember in consolidated income statement. I told you several points with this discussion. So one is, you can remember I told you intercompany sales and purchases should be eliminated in full. Unrealized profit should be added to that. If there is any over provision or under provision of depreciation for the current year, it should be recognized into current year income statement. If there is any impairment loss relating to the current year, it should be added to expense for the current year. Yes, those things. If there is any investment in associate income, it should be recognized to the current year. All right. And finally, you have to divide profit attributable to shareholder of parent and NCI, final profit. How to divide that? I gave you a formula, if you can remember. You take, let's see whether we can write now. So how did I say? I wrote all these formulas once I can remember. When you take profit attributable to NCI, how to take? Take subsidiaries retained profit, subsidiaries profit for the year, plus or minus, made a mistake. Subsidiaries profit for the year, yes, plus or minus adjustments into NCI percentage. So that's how I told you to take. That is profit attributable to NCI at the last part of the income statement. Profit attributable to parent, how to take? Parent's profit plus or minus adjustments Parents current year profit in the given statement of financial question, plus or minus adjustments, plus subsidiaries total profit for the year, plus or minus any adjustments you have to consider as necessary, into group percentage. So very simple. That is profit attributable to equity holders of parent. So if you learn at least that much, I am 100% sure you can take 70% of the group financial statement, especially balance sheet and income statement part. Right, with that, I'll conclude that section. We have done 1 hour and 15 minutes on that, and we'll see some past paper questions. I discussed, I think, several past paper questions last week also, but I'll show you some questions at least by taking 30-40 minutes. So let's see what we can do. First, let's see something about 2016 paper we did last time. No? And also there is 2013 paper also. Look 2013 paper first. These two papers are not in LMS. Sure? Only? Which one you have? 13 is not there. Okay, then with that you can see 13, but anyway I'll upload all the papers I have. If it is not there, you just give me a reminder, then I'll upload it. I'll upload at least 3 papers, past papers. Right? I think otherwise you can take it from the coordinators as well, they have past papers. Right, look. This is one of the case study that we have already discussed in the first semester exam. Right? Ben and Shah's story already we have discussed, therefore I am not going to discuss it now. This is 2013 paper, even we had exams in 2014 January, that time, right? Alright. This is something relating to actually now this is something different. Here this question actually relating, I'll upload with answers, then you can see now. I'll not able to do all these questions today, but I'll upload 2013 paper with answers, then you can see it, right? This one relating to group accounts actually, we asked whether it is business combination or not. Very broad understanding. This is the answer for that, for 10 marks. This is something related to employee share option. I did last week, therefore no need to do it now. I'm not going to do questions from employee benefits, IFRS 2 and financial instruments, because last week I did most of the questions. This is something relating to consolidation. What is first question? Look. Can you understand how to take that? Only for 2 marks. I told, this is the first point I told you today. What is that? If the purchase price is less than fair value of net assets acquisition, what is that? Most of the people said it is goodwill. What is this? Profit on bargaining purchase. Look, I'll tell every time how do we need to write an answer for this type of question. It is very important. How do we need to write an answer for this type of question? I have given 2 marks now. 2 marks awarded for 2 points. What are the 2 points you have to say? 1 point you have to say this difference is profit on bargaining purchase. Very simple. No, you don't want spend more than 10 seconds on this. Second point you have to say double entry for this. Profit on bargaining purchase is recorded as cost of control debit, consolidated retained earnings credit. Look, 2 marks. Only 2 things you need to write. Right, look the second part. Part B of the same. Yeah, understood the answer. What it says? H sold an item of plant to S for 120,000. The plant cost to H was 100,000. It's very clear now. What is that? 20,000 profit they had to its manufacturer. S depreciated plant over 5 years starting from 1113. 1113, 5 years. Show the carrying value of plant in consolidated statement of financial position as at 31st December 2012 and 31st December 2013 and explain the relevant consolidation adjustments. Again, how many marks? 3 marks. Right, look, the answer is there very easy. May points I told these 2 points. What is, if there is any intercompany trade of fixed assets, what need to do first? Identify unrealized profit. Then pass the double entry. How? How to pass it? Look, added profit is 20. PPE account, credit. Seller, I told seller. Who is the seller in this case? H sold. Consolidated retained earnings debit 20. Cost of control credit. Sorry, made a mistake. Consolidated retained earnings debit and consolidated PPE credit 20. Understood? That is first line here. Right, second point. Overprovision of depreciation by the subsidiary. Subsidiary has done the overprovision. Oh, that's why I said buyer's retained earnings debit. Right? There are two methods actually. Right? Here I have taken another way. There is another alternative answer for this. Don't worry on this. I remember. No, I am not going to test proportionate consolidation in the syllabus. No worries. Right? No, I don't do that. Here look, there is one way. Oh, there is another way of doing the same. How do that? Subsidiaries retained earnings debit. How much? Total depreciation of 4 and credited to you have to credit EO depreciation credit. This entry also correct, right? Either this or that, remember. But I mostly prefer to go in this double entry. Why? You can remember it very easily. Otherwise, you don't want to split one by one. No? Every time say seller or the buyer. In intercompany trading of fixed assets, you adjust unrealized profit to buyer. Understand? Not unrealized profit, made mistake. Unrealized profit for the seller, depreciation for the buyer. Understand? Subsidiary return is debit 4 and PPO accumulated depreciation credit 4. Right, fine. Means that all this, otherwise we'll mislead it. Right. Now we got 3 marks. Now how to get 3 marks for this? Tell me. How do you earn 3 marks? Elimination of profit 1 mark. Right? Then the second part, for the double entry 1 mark, for the correct amount 1 mark. Right? It means if somebody writes a double entry without having the figure, still he or she can earn 1 mark. අපි තමු එයා 20 ලිව්වා. පළවෙනි double entry එකේ 20 තියෙන්න ඕන. මොකද ඒක very clear and straightforward. 120 වලින් 100 අඩු කරලා 20 ගන්න තියෙන්නේ. Correct double entry with correct amount of 20, 1 mark. යන්න විතරනේ තියෙන්නේ if you know the fact. In next case, if you write either these two double entries, either one of these two double entries with figure, you can have 2 marks. ඉලක්කම විතරක් හරි double entry එක වැරදි. So then you can have 1 mark. සමහර double entry එක හරි ඉලක්කම වැරදි. Still you can have 1 mark. So perfect එකනට විතරයි 3ක් හම්බෙන්නේ අනිත් එකනට 2ක් හම්බෙන්නේ. So very easy work. So that's how we do. Therefore I feel like every time it is not unfair for students to do marking. හැම කෙනෙක්ටම ලකුණු හම්බුනා. That's why we say work for 3 hours, you can pass the exam very easily. All the terms and figures and entries and calculations, you get what? Marks. So look, mostly what I have noticed, what people do. ලොක්කෝ වගේ යනවා යන්න නැගිටලා මැදි. ඉතින් මන්න යනකොටම දන්නවා අනිවාර්යෙන් ඊළඟ සැරේත් එන්න වෙනවා කියලා කියන්න දෙයක් නැහැ ඉතින්. That means they don't spend even 3 hours. Don't make any effort to do something. Even you don't know these some items, you should be able to do this. It is not a big deal. You can do that. Only thing, you don't have kind of moral courage to do that. Wait 1 minute. Look the D part, part C. Yes, what do you think? Another 4 marks. Podi carry the compare. AB PLC owns 100% of controlling interest in other 100%. Very easy. CD PLC and exerts significant influence over EF PLC. An entity which it holds 30% of the ordinary share capital. It means associate. Look, understand? 30% means associate. During the financial year ended 31st March 2013, EF sold goods to AB. Look, associate sold to where? Associate sold to Mishan, parent. Right? 80,000. The cost of the goods to EF was 60,000, means he has added artificial margin of how much? 20,000. 25% of the goods remain in the AB's inventory. That means out of 20, you have to take 1/5. Not 1/5, 1/4, sorry. Out of 20, 1/4 means 5. You can see unrealized profit is 5. Right, now how to do it? Here the double entry is not accurate. This should be 5. Consolidated retained earnings, debit. Consolidated retained earnings, debit, and consolidated inventory credit. Very easy one. I told you the same previously. Then look the next. Now then, fourth one, we ask what are the occasions where you can exclude a subsidiary. Those are there in my slides. You will just read. I'll do this little fast. There we have how many parts? A, B, C, D, E. There are 5 parts for 20 marks. Last one, 7 marks. You need to find out goodwill calculation for 7 marks. No? Easy. You just see how to calculate it. Yes? Hmm? Yes? You can't see. Đấy. Đấy sao ini? Yes, you get it. 80% of ordinary share capital of JKL PLC for 1.45 million. The book value 1.35. It's given. On that date, they had the PP greater than that much. Book value, it's 100,000 there. It means 0.1. And there is contingent liability was there. We have to subtract it, 200,000. That's what I told you previously. Can you remember? Cost of control, debit. Till now, we can't write on this. Otherwise, I'll write everything. And the restructuring plan including details, estimated cost of as well as advance. Estimated cost of the total cost is 150,000. We don't take that. Goodwill, another thing. Yes. Then what is goodwill? 1.35 plus 0.1 minus 0.2 minus net assets on the acquisition date 1.45. It's 200,000. Very easy. Hope quite difficult to read this, but I'll do at least few adjustments related to this. Right? Look this question. We'll do only this question. Beni PLC acquired 60% of Mali PLC's ordinary share capital on 1st April 2012 at the price of 1.06. Why share price is given? You can calculate what? Share price on the acquisition date. Share price of the subsidiary on the acquisition date given. What is the reason to give it? Is that? It is given to calculate fair value of NCI. Can you remember I told? If share price of the subsidiary on the acquisition date is given, based on that you can calculate fair value of NCI. Non-acquired shares into share price on the acquisition date. Right. Look. Then the balance sheet is there. I'll see only adjustments. Beni PLC sold goods on credit to Mali PLC during the year. It's about unrealized profit. You can do plus and minus all these into your financial statements. Then the method is adding 50% on markup. Markup means on cost, you know. Margin means on selling price, right? So then accordingly what you can do, 10 plus, it means 10 plus 50%, cost is 10. 10 plus 50% means 5. Then total value of inventory is 15. Out of that, only 40% remain at the end of the period. Then the total cost is 10, added profit is 5. Out of that we need to take only 40%. 40% means 2. Understand? These two. These two. Right? So then pass a double entry. Every time I told how to write double entry. Seller's retained earnings debit. Now look who is the seller here. Yes, Beni means the parent. Seller's retained earnings debit and group inventory credit. Beni means, yes, Beni means parent. Very simple. Look for 2 marks, 3 marks. How much for this question? Look, 10 marks for this question. Right? 10 marks. Look the second adjustment. Fair value excess. Yes. Fair value of net assets on the acquisition date of subsidiary is how much? 290. Look, it's given. Right? Then I told you how to find fair value excess on the acquisition date. It's kind of big adjustment. Look, usually you can get at least 3-4 marks for this. So then fair value of the net assets on the acquisition date 290. Then you find out book value of the subsidiary on the acquisition date. Right? How to find book value of the subsidiary on the acquisition date? They are given somewhere here. Look, I saw retained earnings on that date 104. Look, that plus. Right? Share capital on that date. Look here, 50 and general reserve 46. Everything together we call book value of the net assets. This sum, book value of the net assets on the acquisition date. Look, it's 200. Understand? What I took? Retained earnings, general reserve on the acquisition date, retained earnings on the acquisition date, general reserve on the acquisition date, and share capital on the acquisition date. That's totally clear. At book value. Then there is excess of 90. That's what we call revaluation gain. Got it? Then double entry for revaluation gain, or we can say fair value excess. What's double entry? Consolidated asset account debit. Asset account debit. Why we need to increase asset value, and credit to cost of control account 90. The next one, under provision of depreciation. How to find? They say this plant had useful lifetime of 5 years from that date onwards. Therefore, that should be depreciated at that much. Then it's on 1st April 2012 to March 31st. How many years? 1st April to March 31st means only 1 year, only for the current year. Then under provision of depreciation is 90 divided by 5. It is 18. Double entry. This is one way of doing it. Oh, I told another entry, easy entry. So now mostly I encourage people to go in this method. Reason is easy to remember. How did I tell you? Seller. Mistake. Buyer's retained earnings debit. How much? 18. And we have to credit. Group this entry also correct, huh? I encourage people to write like this, then it will be easy for you. It means here O. Got it? Otherwise you can split like this. Money, right? Then third one, annual impairment test have revealed cumulative impairment loss relating to the recognition of goodwill is 17. Very easy. After finding goodwill, consolidated retained earnings debit, goodwill account credit 17. It's easier. Fourth one before the last. It is the group policy to value NCI at fair value. Fair value of NCI is given as 195. No need to take the share price because it is given here. Then 195 consolidated cost of control debit, NCI account credit. Got it? Last one, investment made. This is the most difficult adjustment for students. They didn't understand this properly. Investment made by Penny in Mary included the investment given in Penny's PH. Look, that means what is investment made? 159 in subsidiary means what is that balance? What is balance investment? Balance investment you have to take as 209 minus 159 means it is other investment. You have to take into consolidated statement of financial position. But that's all about adjustments. Look, I have done the goodwill account 159, fair value, Odisha, retained earnings on that date, acquisition, this thing, revaluation reserve, finally goodwill is 64. Look what the way that I have tested. I gave certain questions right answers. I didn't ask you to calculate or prepare statement of financial position. This is little hard, but easy for me to do marking. Why? Only 5 answers. I should see whether it is correct or wrong. That's it. Remember, therefore, this time also this will happen. I'll repeat a question that I did in the class as it is without having any figure change. I don't change even the figure, but I ask this set of questions. If I give you a question which I have done in the class, repeating the same, you have to have exact answer. If the answer is wrong, 0 marks. So it's good, no? Because same question repeating as it is. Look here, only 5 questions. You have to write answer now. First one, what is the post-acquisition profit of the subsidiary? Out of that thing, we have to subtract pre-acquisition one. Total accumulated profit minus the previous one. It's easy. Calculate revaluation deficit. Only we have calculated 90. Another 2 or 3 marks. I can't remember how I gave marks. Probably for the first one, the second one maybe at least 3 or 2. Calculate share of profit of group from post-acquisition retained earnings. That minus the previous one into 10%, 60%. What is a goodwill? You have to prepare a goodwill account and find it. Calculate share of profit from NCI from investment from post-acquisition retained earnings. Same formula. Now this is this one and this one is this one and this one. Probably more marks for this one and this revaluation. 5 marks will be allocated maximum of 5 or 6 for this 2. For all others, maybe 4 marks. That's all about it. This is from the thing we have done it. We have done all these questions before. Hope you can remember. There is another question number 7. This time also the structure will be like this. All the questions from IFRS. Right? Therefore, if I put IFRS, I'll put it as a separate question. Why? Sometimes people think this is little difficult. Then if you need, you can give up. No worries. I don't mix IFRS with other question. Don't worry on that. Understand? If you're not familiar, but it is easy, right? If you're not familiar with IFRS, you can ignore that part and come for other parts. But anyway, then you'll have only 5 questions. Then you have right answers for 5. Or maybe I'm not sure whether I'll give 7 questions this time. But 6 sure. Sure, I'll give 6 questions. Out of those 6, you have to write 5. Out of those 6, sure, 1 is from IFRS. Think on that and do, right? Answers also there now. So most of the questions actually we have done now. Even all these schoolroom story, can you remember? Same questions we did when I discussed all these IFRS. So therefore I don't expect to do all these again. And this is also done by Mudit. So that's all about 2013 paper. Same, no? Five? No need to talk about even 6. Why? Group income statement. Yeah. Which one? That's what I said. Impairment of goodwill for the year. Then what you have to do? This 300,000. Add to here. Add 300,000 here. As an expense. I'll do all necessary adjustments. We need income and rent. Rent. What is that? Platinum. Silver, no? Then you have to deduct it from minus 100. Look, it doesn't take more than 5 minutes. Nothing. During the year, They sold 200,000 worth of goods to silver. What is unrealized profit? No need, no. There is no unrealized profit. Let's assume. Then what we need to do? Look, I have done. Right. It's very easy work. After calculating this, what do we need to divide that one into two profit attributable to parent and others. Hope this is more than enough. Right? So then with this this actually we will wind up this session. It is more than enough because I am not well today. That's why I came. Otherwise I don't come actually. If it is not the last lecture, I don't come sure. Right? So I came because of the last lecture, and also I had lectures on the morning. No, so actually I came because the previous lecture also cancelled. So then what I feel like, if you don't do these two lectures as last two lectures, we feel like we are ignoring our responsibility. So that's why I came, and actually I did as expected. Actually I wanted to do only one more question. That's IFRIC one. So the seventh question in 2013 paper, anyway, those answers are there, therefore I'll upload it. So that's my expectation today. Only 2 minutes again. Yes, sure. I'll upload everything with answers, no worries on that. And remember, for the examination, I told you the structure and everything already given, therefore don't worry on that. There will not be theoretical questions like defining something, etc. There may be small important parts, not like theories, just to elaborate something and all. That's all related to the exam, and you will have maximum of 6 or 7, not sure exactly, let's see. 6 questions. Sometime I'll try to include at least MCQ one from consolidation. It's easy for you as well as easy for me to mark it. So then as the final lecture, I'd like to thank everybody who participated for lectures, even the people who studied these, and hope you didn't ask more questions. People just stay there without having questions. Actually, sometimes we also feel like a little boring when people are not there in the class, do lectures. So anyway, now we delivered as possible as we can. I'm sure it's actually, since it is online version, not that much easy to do all these group accounts and all, because those are very big questions. Sometimes quite difficult to do big questions on the screen. So that's why we selected only part of the syllabus, actually not syllabus, part of these groups, not all the hard questions and the big questions and complex ones. So anyway, now finally I'd like to wish you all the very best for your exams as well as for the future. Since this is the last one, I hope that some of you will come for the second year, and I am sure most of the people will not come for the second year. So therefore I am going to stop with this. Thank you very much. Right.